Right, that's the first take on the Nifty, by the way. That's the opening rate. Looking pretty good, up 160 odd points.
That early morning gap up opening above 17,200 has not held, and some amount of profit booking has set in. The Sensex have given up all of the morning gains and are currently absolutely flat.
Absolutely flat right now. What, 7 or 8 points change?
We are practically at the lows, 16,968, 67. The only solace is that perhaps this is not just an India-specific problem. As we just pointed out, markets across Europe have turned sharply lower.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about the 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. The sharp fall in Europe spooks Indian stock markets. The Sensex gives up early gains, declines over 300 points. Financial stocks remain under pressure, with the Nifty bank falling by more than 800 points from the day's high. An Adani Group spokesperson tells CNBC-TV18 a special-purpose vehicle controlled by Vinod Adani owns cement majors ACC and Ambuja. The statement puts to rest all speculation on Vinod Adani's relationship with Adani Group companies. Reliance Jio hikes entry-level tariffs for new postpaid plans, which still remain cheaper than Bharti's. They also introduced the cheapest available family plan. The move spooks Bharti stock. The stock is down 2%. Ramkrishna Forging and Titagarh surge after their consortium is declared the lowest bidder for a large railway order. A software-defined mobility deal with Honda gives KPIT Technologies a fillip, while PVR surges 1.25% after bullish commentary at its first analyst meet post the merger with Inox. Metals surge as investors bet on higher demand from China. Steel prices hit an 8-month high. Nifty Metal Index up 2%. And here is the lineup of what we have for you in store today. We bring you market opinion from Mark Matthews of Julius Baer and Mihir Vora of Max Life Insurance. In Corporate Voices, we have Umesh Chaudhary, MD and CEO of Titagarh Wagons. Starting with the day's market action, Dalal Street failed to hold on to opening gains after European markets fell. The Nifty and the Sensex saw cuts of about 0.5%. Financials took it on the chin. The Nifty Bank ending down 1%. Names like HDFC Limited, ICICI Bank were the biggest laggards. BSE companies have erased a market capitalization of over 50,000 crore rupees in today's trade. Prashant, my colleague, is here with a wrap.
Another down day, almost 70 points lower on the Nifty. And in the last 4 sessions, the Nifty has lost about 750 points. Banks under pressure, but nothing like, not yesterday. Yesterday also banks did not do too badly, but the intensity there has come off a little bit on the downside. But they were down once again. The big loser and winner was, of course, the metals index, which was the winner, and the FMCG index, which actually was the loser. I'll start with the losses on the Nifty. Bharti, IndusInd Bank, Reliance, the heavyweight, lost about nearly 2%. SBI and HUL were down as well. Gainers in the form of Asian Paints, Tata Steel and Titan, which were down. Now, the Adani Group stocks were up. They actually flipped around. They were lower in the morning, but they ended higher. Mostly Adani Enterprises, Ports, Adani Total were some of the notable gainers. Last 2 sessions, they'd actually seen some cracks. Now, in the broader markets, it was very strongly in favor of advances for the first half, but it completely reversed. So losses, lots of them coming through. Mahindra CIE, Spark, IRB, Phoenix Limited, KNR Construction and more. But I have to say, numerically, like I said yesterday, there were more losers, but it was not hugely, in a big way, volume-led downsides coming through for some of these mid-caps and small caps. I guess it's back to watching what the global scene throws up our way. To be fair, overnight, you had a very positive handoff, 2% on the NASDAQ, but the market, of course, here has ended lower. So we have some bit of our own local problems as well, which I think is keeping things on the boil. On top of that list, of course, is FII selling, which has intensified over the last 3 or 4 days. Back to you.
Thank you very much for that. In market opinion, Mark Matthews of Julius Baer has said there is no need for big banks to panic due to the SVB crisis. Big banks would actually be a beneficiary. Listen in.
more skeletons can and probably will pop out of closets, but overall, I don't think we need to panic. And in fact, the big banks will be net beneficiaries of this because deposits will go from small banks to big banks.
More opinion coming through. Mihir Vora of Max Life Insurance believes that the Indian economy will be more resilient compared to the global economy. He also lists out the top sectoral bets going forward.
Step back and maybe cut out some of the global noise. Globally, it's going to be noisy. As we have discussed in the past also, our view is that the Indian economy should be more resilient than the global economy. There is much more pain probably out there in the US and Europe because they are not used to 5% yields, 5% interest rates and 6% inflation. So I think there's going to be a lot of gut-wrenching volatility out there in the markets as well as in the economy. I think it would still be domestic financials and capital goods / defense manufacturing segments. I see government continue to be proactive as far as defense spending, defense indigenization is concerned, and the capex spend on railways and roads, etc. And of course, all this, if the domestic economy continues to do well, then retail credit should also continue to do well, which will be good for the private sector financials. So domestic is the theme to go, I would say.
Let's get to the second headline then. Adani Group had a mixed day in trade. An Adani Group spokesperson has told CNBC-TV18 that a special purpose vehicle controlled by Vinod Adani owns the cement majors ACC and Ambuja. The statement puts to rest all speculation on Vinod Adani's relationship with the Adani Group companies. Vivek is here with the details.
Well, thank you for that. The Adani Group stocks continue to remain in focus after a morning context story published on Monday, 13th March, which reported that Ambuja Cements and ACC are owned not by the Adani Group, but by Vinod Adani-controlled entities. In fact, what we've done is we've gone through the entire disclosures made in the open offer document and have independently verified that for Ambuja Cement, that the open offer document was made by an entity controlled by Vinod Adani. The disclosure reads, the ultimate beneficial ownership of the acquirer, that is Endeavour Trade and Investment Limited Mauritius, is actually held by Vinod Shantilal Adani and Mrs. Ranjaben Vinod Adani. The chart on your screen actually indicates the multi-tiered SPV ownership structure of the group. An Adani Group spokesperson actually told CNBC-TV18 that when you're talking about this particular Endeavour Trade and Investment Limited, controlled by Mr. Vinod Adani, the acquirer of ACC Limited as well as Ambuja Cements Limited, belongs to the Adani Group. This fact has been disclosed in our public offer document dated 19th August 2022. The point of concern on this is that the Adani Group had indicated in its response to Hindenburg's allegations that transactions with Vinod Adani entities did not qualify as related party transactions. And as per Indian laws, Adani Group's response on the non-disclosure of related party transactions with Vinod Adani Group entities said, and I quote, all transactions entered into us with entities who qualify as related party under Indian laws and accounting standards have been duly disclosed by us. Further, these have been carried out on arm's length in accordance with applicable laws. Vinod Adani does not hold any managerial position in any Adani-listed entities or their subsidiaries and has no role in their day-to-day affairs.
On the 30th of January, we also had a chat with the Adani Group CFO. This was after the Hindenburg report was released. At that time, the CFO told CNBC-TV18 that he has never had a business meeting with Vinod Adani in the last 11 years at the conglomerate.
I'm the senior most finance executive in Adani Group. I've been there for 11 years. In 11 years, I have not had a business or working meeting with Mr. Vinod Adani. The reason is very simple. He's not the executive in the business. And even I am not aware of how he manages his family offices or how XYZ manage their family office. It's completely separate. And many promoters in India have this. Their family offices are completely separate from their businesses. The same thing is here.
Okay, let's get to the third headline then. And this is on Telecom. Now, Reliance Jio has launched new postpaid plans. So first, let's talk about the Postpaid Plus Jio Plus family plans. Now, these are priced at $399 and $699. The $399 plan also offers an additional 3 add-on connections at 99 rupees per SIM because these are family plans, which means the total monthly charge for a family of 4 is $696. There is also another plan which offers higher value, and that's priced higher at $996 for a family of 4. Now, how do these plans compare with Airtel's? For starters, Airtel Family Plan begins at $999. So for a value-conscious family, Jio's plan of $699 is the only available option and significantly cheaper than Airtel's plan. But the Airtel plan of $999 also is bundled in with certain OTT connections like Amazon Prime and Disney Hotstar, which Jio's $699 plan does not offer. The Jio's higher value plan of $996 is comparable with Airtel's $999 plan because that bundles in certain OTT connections. In terms of individual plans, Reliance Jio's entry-level individual postpaid plan was at $199. But for new subscribers, the entry-level individual postpaid plan will now be $299. That said, despite the increase by Reliance Jio, it's still cheaper than competition because Airtel's plan begins at $399. Question is, can this spur Jio's postpaid growth? Now, Jio's done quite a smart thing because for new subscribers, the entry-level postpaid plans, the tariffs have increased by a whopping 50%. But for a family plan, they are getting aggressive because they are providing a cheaper alternative to peers, but with lower value. Also, their family plans are lower than the plans that they had earlier come out with. So in that sense, they've gotten aggressive. Jio, up until now, has had limited success in postpaid despite their earlier plans being quite attractive and cheaper. Remember, while postpaid is a smaller percentage of the overall subscriber base, it's a lucrative space given the higher ARPUs. CLSA says although Reliance Jio's new entry family postpaid plan will renew expectations of subscriber gains, postpaid subscribers are not as price sensitive, and Reliance Jio's $996 offer is comparable to that of Bharti and Vodafone Idea's offer at $999. Reliance Jio's individual postpaid tariff hike of 50% will make entry-level plan comparable with Vodafone Idea and cut Bharti Airtel's tariff premium from 100 to 33%. Kotak says Reliance Jio's renewed aggression against our expectation of an increase in postpaid tariffs comes in as a surprise, and it could delay the prospects of a tariff hike in the near term. However, they do not expect Reliance Jio to get aggressive in the larger prepaid data segment. That's all the updates on the telecom front. Get into a break. On the other side, we'll be back in a jiffy with the other headlines.